guys, what is going on? Welcome back to my Robinhood portfolio. Hope everybody had a fantastic day of trading today. As you can see with my portfolio, a very volatile day. Kind of an up and down market today, starting right around baseline here, up a couple $100, spiking up to $9.10 before pulling back all the way to $24.50, spiking up again above $9.50 before pulling back, like I said, to $675.15. With regards to the overall stock market, all of the major indices were in the red today. The S&P 500 was down 0.86%. NASDAQ, which represents technology stocks, down 1.44%. And the Dow 30 was down 168 points, 0.78%. What I'd like to do today is talk about a new investor $1,000 portfolio. I know a lot of you guys have requested this video. I've kind of delayed putting out the video, so why not put out a video today? This is going to be a portfolio of 10 different stocks, right around $1,000 for the overall portfolio value. And the nice part about this is that you can divide by half the number of stocks in each of these particular holdings that I'm going to be discussing to make it a $500 new investor portfolio. So you can buy the number of stocks I recommend for a $1,000 portfolio, or simply have those stocks for a $500 portfolio. So having said all that, let's jump into the portfolio. The portfolio is essentially going to be on a backbone of very good quality Vanguard index funds, S&P 500 index funds that in themselves are very good vehicles for not only growth but dividends as well. And these Vanguard ETFs are very large ETFs. One of them has 510 individual securities within its underlying portfolio. The other one has 326. And based off of that backbone portfolio, I also selected a number of different stocks from different market sectors, which I think will do okay over the next 1 year time span, 2017 going into 2018. A few individual stocks from the pharmaceutical industry, financials, consumer discretionary, industrials, and technology to round out the portfolio. So having said all of that, let's jump into the portfolio here. The first stock is VOO. You guys have probably heard this stock before. I've talked about this stock on numerous other occasions. This is one of the predominant holdings I have in my E-Trade account. This is an S&P 500 ETF. If we scroll to the bottom, you can see this is tracking a market cap weighted index of U.S. large and mid-cap stocks selected by the S&P 500 committee. This has an underlying portfolio of 510 different stocks. The top 10 holdings are Apple, Alphabet, which is the parent company of Google, Microsoft, Amazon, Facebook, Johnson & Johnson, ExxonMobil, Berkshire Hathaway Incorporated, Class A stock, JP Morgan Chase & Company, and General Electric. So some very good large cap blue chip companies with companies that have some good dividends as well. As you can see in the middle here, it's a very large fund, $67.79 billion. It's got a great dividend yield, 1.94%, and it's got a reasonable PE ratio as well, 24.063. If we take a look at its performance, essentially it is going to be mirroring what the underlying S&P 500 is doing, because essentially this is an S&P 500 index fund. So you can see here, definitely trended back today with all of the major indices in the red today. And over the last 1 year, it's up 20.47%. In the last 5 years, up 97.01%. So essentially mirroring what the underlying S&P 500 is doing. So for the portfolio, you can buy one share of this. But if this is a little bit too pricey for you, starting off $221.97, a very good alternative fund would simply be the VOOG here, about half the cost. This is another great Vanguard S&P 500 fund. And I forgot to mention as well, the last ETF, VOO, the expense ratio is only 0.04%. So very low expense ratio for a very quality, very good index fund. And I was mentioning here, this fund here, about half the price as that past fund. But the nice part about this is that the underlying portfolio is essentially identical to the first one. This has a little bit less number of stocks in the portfolio, 326 compared to 510 for VOO. It's got essentially the same top 10 holdings: Apple, Alphabet, Microsoft, Amazon, Facebook, Johnson & Johnson, ExxonMobil, Berkshire Hathaway, JP Morgan Chase & Company, and General Electric. Essentially identical to VOO. It's also got an okay dividend yield, 1.594. The PE ratio is about the same as VOO as well. Definitely a much smaller ETF here, 1.60 billion. And if we go up to the top here, it's essentially identical to that last fund and identical to the underlying S&P 500, 21.11%, as well as 101.29%. And looking at some of the statistics here, it does say it's a little bit maybe higher risk, a little bit more oriented towards growth, but again, the underlying portfolio is essentially identical to the last stock, VOO. So you can either buy 1 share of VOO or 2 shares of VOOG for the portfolio. And the third S&P 500 stock, which I have in my Robinhood portfolio, is SPHD. And this is a great S&P 500 dividend fund as well. It's not a Vanguard fund, it's a PowerShares fund. The expense ratio is a bit higher than the Vanguard fund, but the nice part about this is that the dividend payment is much higher, and it's a monthly dividend payment as well. And you can see on the bottom there a quick review. It's a high dividend, low volatility ETF tracking a dividend yield-weighted index comprising the 50 least volatile names chosen from a short list from the S&P 500. So quality ETF, quality blue chip stocks, high dividend yielding stocks from the S&P 500. You can see it's a large fund, $3.08 billion, but definitely nowhere near VOO, the initial fund I mentioned. The PE ratio is a little bit higher as well, just because it's got a higher dividend yield and it's a monthly dividend stock as well. But the nice part about this for new investors is the price. It's only $40.16, so it's very easy to jump in and buy shares of this stock, even with smaller portfolios. You can see here the 1-year growth is a little bit lower than the other S&P 500 ETF funds, VOO and VOOG, and this is because it is focusing on low volatility stocks. And over the last 5 years, you can see a little bit lower as well, 87.59%. But if you factor in the compounded monthly dividend this stock has, much, much higher than VOO or VOOG, it's about roughly equivalent to the other stocks. Another great ETF to put into the portfolio, and for the $1,000 portfolio, you'd want to put in 6 shares of this particular stock to round it out about $240 or so. So far, one share of VOO or 2 shares of VOOG, and then 6 shares of SPHD. And the last stock that I would incorporate into the $1,000 portfolio would be VB, another very good Vanguard fund. The nice part about Vanguard funds is that their expense ratios are very, very low. The expense ratio on this particular ETF is only 0.06%. And as we scroll down to the bottom, you can see this is a small cap ETF, essentially tracking companies that are $5 billion or less, kind of in the $1 to $5 billion range. You can see the dividend yield is okay, 1.48. The PE ratio is very, very high here, 68.85. It's got a higher market cap than VOOG, but simply not anywhere near VOO, 18.52 billion. And you can see here the growth of the last 1 year, 22.03%, and over the last 5 years, 92.39%. So a little bit higher than the underlying S&P 500, definitely higher than VOO and VOOG. But the caveat behind this stock is it's much, much riskier than large cap stocks in the other 3 ETFs, VOO, VOOG, and SPHD. These companies are Align, Domino's, Cadence, CD Corp, Packaging Corp, Teleflex, UGI, Vail Resorts, Atmos Energy. A lot of companies most people probably have not heard of because they're much smaller companies. So there's a lot higher risk in this particular ETF, but the higher the risk, the higher the reward. So over the long term, this definitely has more potential for growth, but on the other side, the flip side of that is it's also much, much more volatile and much riskier. So for this particular stock, I would simply be buying 1 share of this particular stock. So essentially we would have $500 or so of large cap blue chip stocks from very, very good quality ETFs, and then 1 share of this, $135 for a small cap from a very good company as well, Vanguard. So about $135 for small caps ETF, and then $500 or so for large cap stocks, and those will be the ETFs in the portfolio. So you can see almost half, a little bit over half of the portfolio is large cap and small cap quality ETFs. And then to round out the portfolio, to have a little bit of fun buying and selling individual securities, I've chosen a few stocks that I think will do very, 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 very well over the next year or so. The first one here, and these are stocks in my portfolio, PFE, Pfizer. This is one of the initial stocks I bought with the Robinhood portfolio. You can see on the bottom here, this is a pharmaceutical company. Has a very, very strong portfolio of products in its particular company portfolio right now. Dividend yield is great, 3.756. PE ratio is good for pharmaceutical companies, 28.36. It's a very, very large company. $201.42 billion. And you can see over the last 1 year, it's up 0.9%. Over the last 5 years, up 75.38%. And moving through 2017 and into 2018, I think pharmaceuticals will be very, very strong. So this is just one of several different pharmaceutical stocks to choose from. But I think this would be the one that I would buy jumping into a new Robinhood portfolio with $1,000. The second stock here is from financials, BAC Bank. There we go, Bank of America. Another great stock. You can see on the bottom here, this is a multinational banking financial services corporation. Very, very large. You can see the earnings here has been doing very, very well. It's got an okay dividend yield, 1.131. PE ratio is very good for financials, 15.4. Very large company, 238.18. And the great part about this company is that it's initiating a very large stock buyback. So it's going to be, I think, buying back $15 billion worth of stock over the next few years here. You can see over the last 1 year, up 89.13%. And over the last 5 years, 211.21. And I would consider this still to be a buy. I know it's already trended up quite a bit here, but with the stock buyback, that's definitely going to be putting an upward pressure on the price of the stock. So I think this would be a very, very good play, again, through 2017 into 2018. The third stock here, another stock that you guys have heard about extensively in my video series, in my portfolio, Ford Motor Company. Not going to go into the specifics because I've already talked about this quite extensively. It's got a great dividend yield, great PE ratio for the consumer discretionary segment, and I've done a lot of day and swing trades with this. And as you can see on the bottom here, this is a blue chip company. It has a very, very strong portfolio of earnings. It's had record profits the last few years. It became the largest U.S. automaker with regards to volume over the last couple months. And again, this is probably a contrarian investment. Over the last year, you can see it's definitely fallen out of favor with investors, down 5.73%. Over the last 5 years, only up 44.32%, which is not very good considering the overall S&P 500 is up about 95 to 100% during that time. But again, this is probably on sale, a contrarian investment, getting into the stock while it's cheap. And then it's got a great dividend yield, so you can hold this for the longer term, pick up that great dividend yield. And I think moving forward, this stock has a lot of room, a lot of upward pressure will be happening. Again, it's going to have probably a depressed 2017 and 2018, so it's definitely a contrarian investment here, basically buying into a particular industry when the industry is on its downturn. But when it starts upticking again, the potential for capital appreciation is much, much higher. So that's kind of what a contrarian investment is all about. The other stock here in consumer discretionary is another stock, a relatively new stock. It branched off from YUM Brands. That's YUM Brands China. This is a very, very popular company, or set of companies in China. As we scroll to the bottom here, you can see this has brands like KFC, Pizza Hut in its particular portfolio. A lot of different restaurant holdings. Does not have a dividend. It's got an okay market cap of $15.13 billion. And you can see here, as I was mentioning, it's a new stock. This branched off from YUM Brands to have its own company, YUM Brands China. And you can see here, since it's become its own stock, it's performed very, very well, up 30% over the past year. In the past 5 years, again, simply 30% because it's a new stock here. Another stock from a different market segment, industrials, another contrarian investment. This is definitely a stock that is not having explosive growth, but definitely has potential to be a very, very good long-term buy and hold stock, is General Electric here. On the bottom here, you can see this is a very large conglomerate, a multinational company that has its fingers in almost every market segment, to be quite honest. It's got an okay earnings portfolio here. It definitely has been decreasing. That's put a lot of downward pressure on the stock, as we'll talk about. Dividend yield is 2.94. PE ratio is very reasonable for industrials. It's a very large company, $235.16 billion. And you can see here over the last year, it definitely has fallen out of favor with investors. Kind of like Ford, this would be a very good contrarian investment, at least in my opinion. Over the last 5 years, it's up 53.72%. Not great considering the overall S&P 500. It's about double that. So again, I think this is a very good play for a contrarian investment. And I forgot to mention, for Pfizer, 2 stocks, Bank of America, 2 stocks, Ford, 5 stocks, Yum Brands China, 2 stocks, and GE here, 2 stocks as well to round out the portfolio. And the last stock here, another kind of contrarian investment, but I think has a lot of potential over the next few years, is Intel Corporation here, INTC. If we go to the bottom here, you can see this is A very large company, one of the leaders with regards to chip, especially PC, but it also has a number of mobile chips as well, semiconductors, microprocessors, so on and so forth. You can see the earnings have been very, very strong. It's got a good dividend yield as well, 2.867. The PE ratio is phenomenal for technology stocks, 15.58. Very large company, 161.05 billion. We can see here over the last week and 1 month, it has definitely trended back as the NASDAQ has trended back. For the last year, however, it's up 10.17%, which is okay. And over the last 5 years, only up 49.31%. So again, in another contrarian investment strategy, I think this would be a great stock to jump into for a buy and hold strategy. And for the portfolio to buy 2 stocks of this. So again, INTC, Intel, buy 2 stocks, about $70. GE, 2 stocks, about $70. YUMC, Yum Brands China, 2 stocks, $75. Ford, 5 stocks, about $55. BAC, Bank of America, 2 stocks for about $50. PFE, Pfizer, 2 stocks for about $68. And for the ETFs, 1 stock of VB, a very good Vanguard small cap stock, $135. Then 6 shares of SPHD for about $240, and then either 1 share of VOO for $221 or 2 shares of VOOG for $245. And if you consider VOOG in the portfolio, those collection of stocks total up to $1,001.72. And again, you can buy simply half of those stocks. 1 stock of Intel, 1 stock of GE, 1 stock of Yum Brands China, 3 stocks of Ford, 1 stock of Bank of America, 1 stock of Pfizer, 1 stock of VB, 3 stocks of SPHD, and then 1 stock of VOOG for a $500 new investor portfolio. So hope you guys enjoyed the portfolio. I think this would be a great portfolio starting off on Robinhood with $1,000 new investor. You get great diversification with the ETFs, very low cost ETFs for both growth, underlying index fund, as well as some small cap exposure for a little bit higher risk, more long-term growth potential, and then some very good plays in a number of different market segments. I think we'll be doing very well over 2017 into 2018 with a focus on a contrarian investment model, buying into stocks that may be at their lows for better capital appreciation, moving longer term with good dividend yields to boot. So hope you guys enjoyed the portfolio. Let me know if you guys would change anything in that portfolio or substitute any of the stocks. Those are the stocks I would buy, but there's a lot of different great stocks in those particular market segments. Pfizer is great, but LLY, Eli Lilly and Company is a great stock as well. Intel's great, but AMD I think would also be a great stock. Nvidia may be a great stock as well. So let me know what you guys think about the portfolio. And yeah, kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I've been learning a ton about markets and investing. And with the suggestions you guys are giving me for new things to read up about, I'm learning a lot about investing. I hope you guys are learning as much as I am learning. If you guys have any questions about any of the videos, anything that I've discussed, either in this video or other videos, please let me know in the comment threads below. I do my best to try to respond to every comment that you guys give. And then as well, if you guys have any good videos for ideas, if you guys have any good video ideas, let me know. I'm always looking for new things to read up on, whether it's individual stocks, investment strategies, different types of market segment plays, news, whatever it may be. I'm always looking for new things to read up on, research, and put out videos about. So let me know if you guys have any good ideas. So kind of with that, I'll end the video. And yeah, until next video, we'll see you then.